Hello, Warriors. Shalom, Sinatra. How you, Bran, AJ? Everyone doing okay after the bludgeoning from the Hawk, the mean man? You guys okay after mean Paul? He didn't break down and cry like I thought he might. He was a little shaken up by that Kennedy senator, a friend of mine told me. So anyway, big response. And in the markets that we're not directly related to rates, right? I mean, they killed euro and all the currencies, especially Aussies at new lows.
Good
Finally
morning.
got the stops in cable. That's been a long time target of mine. They finally took out this low, so a lot of people are going to be thinking it's going to break down. I'm going to give it a chance. I almost think that there's more of a possibility that this double top up here, 24.5, is a magnet. So I'm leaning towards looking for longs in cable and already short a little bit US dollar yen going into the BOJ. Gold, the break exceeded my expectations. I thought we were going to hold about 1830. I did put a 1/3 position on in miners, not in leveraged stuff. I did think it was possible that we would take out this 2040 low and gold not make a low. And so far that's the case. I'm seeing a lot of charts that I didn't know that this was a big gap day. Maybe it's because it, happened on a weekend or overnight, but there's a big gap. Some people are showing down at 19 and that's 78.6. So, if we can't get back above 61.8, that may be the next target. Anyway, what I did is I put on a third in this yesterday. Not at the bottom, but, mid-session. Some of this doesn't look great, does it? And BTG, we're in this, which looks a little better. So one ray of hope, and I just want to show this GDX. When we were up here, I thought we could trade between 28 and 26, and this 26 is 61.8. So although silver's made new lows, GDX hasn't gotten to 61.8 back. So here's where we get down here. I'll add my second, third on those miners and maybe look at some leverage positions. What do you guys think? Don't you think it was interesting that everything got clobbered? Metals, currencies, S&Ps, and what he was, the topic was rates, right? So, my question is, there wasn't much effect on rates. So as he was hawkish, just like he was friendly down here, when people thought he was Powell was, talking soft landing possibilities before the employment report. Now he's hawkish up here. So I mean, is he leading the policy, or is the market telling him what he has to say? And he's, hawkish when yields are going up and not as hawkish when yields are dropping. So I just think this wasn't great action considering, if you were looking for higher rates, the end was
You got
able.
them in the short end, basically. That's the thing. Good morning. So you
Yeah,
got all
okay.
the move in 1 year and 2 year, and 10-year barely moved. So that, by the way, as we said, the risk was always for Powell to be more hawkish, and he was more hawkish. He opened the door for a 50 now. The market's actually pricing a bigger chance of a 50 now than a 25. And but we're seeing the 10-year barely move, and that's probably because, yes, 1 and 2 year are going up because he's telling us they're going to be hiking more, but then the market expects a rapid slowdown and cutting, etc., etc. So, and
So
as we
the yield
said,
curve became more inverted.
more inverted, yes, and we discussed this on the flow show. And frankly, from my personal experience, sitting next to the medium term and long end bond and swaps guys where I was working at the banks, it's all driven by flow. 10 years 90% flow, 10 years 10% kind of fundamental. So it is all being front loaded now for the next 1 year or whatever it is, and then the market's expecting a quick retreat in terms of the economy and rates.
Okay, because that had the weakest response. Yen did finally make a new high yesterday. Okay, it's trying to blow out the divergence, but it hasn't yet, going into the BOJ. So, yields didn't do much. The yen now looks stronger than the 10-year. Okay, before it was lagging. Now it has a stronger chart pattern, but I guess you could call this a divergence and maybe some capitulation. Let's get to a broader dollar discussion here. We had a great month last month, and we're getting good follow through. Here's the monthly. So, that looks pretty good. At the same time, and I'm not saying it's over yet, I wouldn't get really carried away after a break like this. I think 106 is only 38% back. So I'm not becoming a big dollar bull now. I think that, I'm going to have to try the short side of the dollar in the next week or so, up around 105.70, 106, see what happens. And the strongest chart pattern on the board is still cable. Okay, I mean, that's, unless you start to get big acceleration, I'd be careful about getting bared up here. That's all. Just gut, because it took forever just to accomplish this. So maybe I'm making a mistake about judging the market based on how long or what a struggle it was to finally do this, and now the floodgates open.
So hey Dale,
Hey, bro.
that's a interesting, I get what you're saying, but let me ask you this, based on your experience, and by the way, good morning, hope you survived Powell okay yesterday.
Yeah.
Based on your experience, when something consolidates for a long period of time and then breaks, do you usually fade the initial move?
This, to me, I guess the debate is this consolidation? Your argument's right, looks more like distribution. So no, you have to go with the breakdown. If you have one, I don't know what number you're going to give the breakdown. Under the low, under this low, or
yeah, it's tough because you got that spike low back over there in January. I mean, I'm short. I shorted yesterday, so okay. But it broke the wedge, the initial wedge, and we've got this long-term double top. And I have to put myself in the shoes of anybody who's long right now, longer term, right? Yeah. They are looking at this, and they're the ones that are currently
under
sweating.
Pressure. Yeah.
Right. It's not anybody who's short right now that's feeling the pressure. It's anybody who's long right now who's feeling the pressure. So that's the way I view it. Especially after if you've been sitting long for the last month, as we had been consolidating above the 200-day moving average, yesterday was a kick in the nuts, right?
Right.
So at this point, you're just like hoping you don't buckle over and hit the ground. So I don't know. That's why I'm very skeptical. You have to be fading the dollar, and that means you have to go back and take a look at yesterday's comments and say, oh no, Powell was really dovish yesterday. Right.
Yeah.
And I don't know if that's
maybe
really...
it's just if I cover up the title and I don't know what it is, and I just look at the chart, and if someone said, well, what do you think? I would say, well, you know what? After this big move, we never really had a deep correction and worked off the overbought condition in the market in time rather than price.
Wow.
So that's probably the most influential part of what I see technically here.
Yeah. Well, wake me up if we get below 118, please. All right, I'll
set the alarm.
I'll let you. And then maybe I'll never get up. But I'll let you go. I'll let you go on with the other guys here.
All right.
It looks like Greg is here too. He may have a view
okay.
of how he sees the sterling.
He always has views, that guy. So, all right, team. Who wants to jump in that has some conviction about something going into Powell's, his encore today?
Well, hey Dale, real quick, can I? I'd love to give the charts over to Greg because I'd love to see what he has. Looks for.
Okay, go ahead.
But before, well, I guess I can take over. I wanted to talk a little bit to the guys because we have ADP non-farm in just 5 minutes. And I wanted to see if anybody has any particular views ahead of the ADP data. So Ryan, do you have any thoughts that you guys, and I'll ask K-Man and Stelios too. I'd love to hear you guys' thoughts with ADP. I mean, and let me just mention it really quick. We have on Twitter, we just posted the jobs poll. Can you talk a little bit about that first, Ryan?
Yeah, I'll just put the link there in the chat. The non-farm payrolls competition is open, so have a guess on that. You might want to also have a look at the blog post attached to it because I put a little bit of a summary in because it's going to obviously be a spicy number this month. So there's a little bit of analysis in there too over some possibilities. But yeah, ADP up in a moment, and that could be an important one if it's a big variation. 200k expected. If it's a big variation, it's going to put a lot of spice into Friday's number.
Yeah, and we also, without and I don't want to dismiss it, we have the JOLTS jobs openings today at well, for me it's for everybody it's an hour and 45 minutes from now, but it's 10 a.m. Eastern number. Do you think that one's going to be viewed a lot? And I want to ask K-Man that. What do you think about the JOLTS jobs numbers today?
Well, it would have an impact if it comes back down. That's what I think, because then the imbalances that Powell is hinting at are going to be reduced. So if it comes down, I think it may have an impact. Regarding the ADP, I think it's a complete lottery, and it's been so out of sync with the NFP numbers that if we get an algo move on the back of it, I think the market is going to counter trade that move. That's my view. I think ADP is just a lottery.
All right. Well, we got ADP, we got the JOLTS jobs numbers, we got second day of Powell, all coming up very soon. I'm gonna put up the charts here in just a second. Hey, I wanted to mention if you guys are from you guys know who Forex Live is. I actually had a drink with Greg Michalowski last night. We don't often get a chance to drink. We're in the same neighborhood, but I got an opportunity to meet up with Greg. He's a great guy. If you guys have never met him, he's awesome. We haven't seen each other since before COVID, and he somehow got a couple more grandkids, which is crazy. So it's cool to catch up with him. Dale, you've interviewed Greg Michalowski before.
Sure.
Yeah, he's super awesome guy. You should guys pick up his book.
Did you hire him?
Currency Trends. Was that?
Did you hire him?
Hire him? No, he works for Forex Live, silly.
Oh, okay. I know you're on the.
He's over at Forex Live. No, we just we've been talking about getting together and having a beer. And just did it. And Ryan, you used to work with Greg.
Yeah, Greg's great. Love Greg.
A lot of people love Greg.
He's a great. Yeah.
If you want a good book on trading, his book Attacking Currency Trends is one of the best for inexperienced traders.
Yeah, it's a really good book especially if you're newer in the markets and just kind of understanding the FX. Hey, by the way, I'm gonna put this. Here's a 15-minute chart in yields, and you can see we're at channel support. I just want you guys to all see that. We were looking at that yesterday.
Wasn't that your chart the day after Friday, Blake? You showed the failed breakout and something.
242 ADP.
Oh,
242.
what was it? 282?
242.
242. That's a big number.
it?
Sorry, I was trying to get the data up here. Damn
Oh,
it's
all right. Everyone has
I
screens.
somehow closed out my data flash. So let me move this back over. So we got $242,000 index firming. Got to keep that one. You know, I know as K-Man said, it's a little bit of a volatile number, but still.
So far, 2.5 pip move. Good luck.
Yeah, not huge response. And let's talk about the jobs report. Actually, how many of you guys are betting against the United States and say that the jobs are going to finally roll over? Who?
Me.
I mean, I am. I'm shorting the dollar yen, so I guess technically I am, but I'm also long the dollar with. I'm short sterling. You know, I'm short the pound, so I guess I'm playing the dollar both ways right now. But what do you think that the employment data is going to roll over this month, Ryan?
Oh, I thought you meant just playing the competition. No, I've gone for minus.
well, here's the thing: is I actually voted for 262,000 jobs to be created. That means we are more than likely going to miss. So I'm pretty good at that. pretty good at that.
Isn't there a chance because perhaps the last report included holiday workers?
Yeah, I mean, it was due to weather and all sorts of variations. So, I mean, chances are we're going to see a revision back to the mean, but I don't know. I mean, are we? I don't know. I'm, asking for a friend.
Find out
I mean,
Friday.
What do you think, Stel?
About the jobs numbers?
Yeah, I mean, what are we going to have a huge jobs number? I mean, or what's
who knows? I mean, for me, it's been it's a volatile number. I'm not going to bet on it, but I still think that the market is clinging on to hope for something that's going to make that's going to bring risk on, and so I still think that the risk, as I said yesterday with Powell, I think the risk is for things to go a little bit more hawkish for a little bit longer. So I wouldn't be going against this move just yet.
Yeah, and that's the thing, right? Everybody's hoping for weak data so they can start buying stocks again. And I mean, look at gold. Gold looks like crap. I mean, Dale, what do you think? Do you think gold's going to trade it to a new low here?
It could.
I mean, I mean, this is the thing that makes me so scared. You get a drop and then you get a consolidation. That's typically in this type of scenario, this is a bearish consolidation, right? So the next move should be down in gold, or that's where the probabilities come in at this point. And what a big rejection at the 618 retracement. You see the 618, that was a huge one. And yesterday it really slumped. Nasty move in gold. And how about silver? Somebody actually was in our chat room yesterday, Dale, asking about, I wonder how Dale feels about the gold silver ratio. So Dale, how do you feel about the gold and silver ratio right now?
I think it's in the topping zone, but momentum is pretty strong. Look at the RSI reading. So it's not, it doesn't meet the conditions for me to step in and short it with this kind of momentum. But I'm not looking for, I think we failed before we get to 95. So what we had, almost 78.6 back.
Yeah, getting close. I'm more of a seller than a buyer. So is this an now tell us how to read this. Those traders that don't trade precious metals.
It's simple. If it's trending up, your preferred long is the silver, and it's trending down, your preferred short is the silver, your preferred long is gold. You could see as it was going up when we broke out that wedge, you had successive higher highs in gold over the period of a couple months, while silver was stuck in a range and couldn't get through 24.50, and that's reflected in the gold silver ratio breaking out at around 80 and railing to, here we are, 90.5. But it's not time to get bearish, get bullish the gold silver ratio up here, in my opinion.
Awesome.
the
All right.
other way.
Well, thank you for that. And really quick, now that we got the ADP data out of the way, Grega, good morning. How are you?
Hey, morning. I'm fine. Thank you.
Hey, so we wanted to hear from you. How did you feel about Powell's move yesterday, and what are you thinking?
Well, I still think that maybe markets, now that it's finally somehow more clear what the Powell is trying to do here, I just think that we are closer to potential resistance on the dollar, but there is room for on the euro to 104, in my opinion, and the dollar index potentially 107, even 108. But I still think that moves from February that are corrective and that we will reverse this later this year.
All right. Just so you guys can see the dollar index, this is the, flag pattern. It completed just now. I mean, it did, today. It completed here, and we're getting close to the 38% retracement of the entire drop. So, the dollar index, and you can see that shaded zone. It's what, if you were on the ForexAnalytix morning edge yesterday or the daily roundup, you all knew that we're now in the resistance zone for the dollar. So pretty important resistance up here. And here's the thing, I have to say this about the dollar, Greg, and I'd love to hear what your thoughts are here. If we get above this 38% retracement, which comes in, let's say 106.20, I don't think there's going to be much stopping the dollar. And that's going to be pretty damn bullish going into. Do you have any counts that mention that? Because I'll pull up your counts here on ForexAnalytix. And for people that don't know this is where Grega will post his stuff for ForexAnalytix. So what are you seeing here regarding the dollar?
Well, clearly, I'm looking at the corrective subdivisions here from that lows, and we are, as you said, we are at the first resistance here around 106. But as I said, 108 could also be very important. And keep in mind that we are still only just 38.2% right now of that 2022 move. So we definitely have plenty of room to recover further. But I just think that we are in a corrective retracements here. I mean, we are also seeing Aussie reaching some very important key levels as well. Kiwi the same thing. So yeah, if you look Aussie here, definitely this is a very important level when you look back at December swing lows. Of course, we don't know if that will break or will hold, but I just think it's very important decisions to be made here in the next few weeks.
Yeah, the Aussie basically has completed a head and shoulder pattern, and the flag pattern. I mean, we haven't quite reached those levels, so you could always say there's unfinished business, but in technical analysis, it's close works, right? And we're getting close. So you think that these are some pretty key levels here, right?
Yeah, and also as you discussed with Dale earlier regarding cable, I also there think that we are at some very nice supports here, not far away. 117, 118. I think could be a pretty nice rebound there.
Okay.
I mean,
right.
Also from a longer term perspective, I think that we could be finishing these corrections that started.
All right. Well, hey, by the way, the dollar yen is selling off here. We're starting to, roll over. I'm going to point this out. And Dale, I heard you say earlier you started short in the dollar yen. There's a lot of time left in today, but let's, talk about the 200-day moving average. Really has, the probe above it has failed thus far, and so we need to be thinking about that as we go into today. And I'll be more than happy if the dollar yen rolls over here. But what do you think came in ahead of the BOJ this week? This is Kuroda's his last stand. Will he have a sake in his hand or not?
It's really close call. He has surprised in the past, right? The base case is for him to leave everything unchanged because the data really don't warrant a big change now. But is he going to prepare the terrain for his successor? It's all possible. And honestly, apart from perhaps a few very short-term scalps here and there, I'm not going to have anything in yen running into that meeting afterwards. On the other side, if you take the combination of the Bank of Japan and the US jobs report, we could be in for a big move in dollar yen on Friday, a big one. Because if it doesn't do anything and we by any chance get a good report in the US, I think dollar yen can trade much higher. But if in turn Kuroda moves, then we know, of course, which direction the yen is going to go for the short term at least.
Yeah. All right. Well, you know, I'm watching this. It's kind of a loose channel in the dollar yen, and basically, you know, let's face it, the dollar yen continues to make higher highs and higher lows, and that's a big, you know, problem with a trend that's, you know, that's trying to roll over. It's not going to roll over until you break that cycle of higher highs and higher lows. So at this point in time, I think we do have to respect it. Support's probably going to be around 136. But appreciate your thoughts there. Brian, did you have anything you wanted to add regarding the yen at this point?
No, not really. I mean, you know, we've had the break above 137. That's our key level at the moment, just on the short term, 136.90. If we hold above there, it keeps this break in play. Back under, we maybe go back in a box. Just as we're talking, 10-year yields are dipping somewhat, 3.93%. So that's obviously going to drag down dollar yen with it. Not sure why 10 years are, or even the long ends see it coming off on yields, but it is what it is. Yeah, I'm out on my long-term shorts. I bit the bullet in the end. 137.25. Enough was enough. So I'm the same as Kate, moving to the short-term trading, just trading against the levels. You know, the downside level is pretty clear. 135, 20, 30. Under there, it's a different picture. Above there, we keep this rally maintained, and you know, 138 was a level I was looking at before we got close enough overnight. So you got your range now, 138, 135, 2030.
All right. Well, I appreciate your thoughts there. We have the Bank of Canada is coming up a little bit later this morning. Somebody just was asking, is the BOC expected not to make a move on rates? That is correct. They are not. They are expected to keep rates unchanged. Remember, they were one of the they were actually, I would argue they were the first central bank really to pause. And or that are expected to pause. I'm sorry.
They were the first to hike as well, weren't they?
They were. They're like, you know, look at you Canucks north of us. You know, just Canucks. You know, the dollar CAD. Theoretically, you know, you would say, well, if they don't raise rates, or they don't raise rates, is that bearish the Canadian currency? Theoretically, it probably would be, but everybody's already factored everything in. You know, it's already baked in right now, if you will. So you got to imagine, you know, how they're going to approach, you know, what their statement's gonna be. Right now, I think we have to be respectful technically that it has broken out, and we do have this bull flag pattern this is a pennant that we talked about. It's already in play after yesterday. So while we're above this level, you can see it right here, you know, while we're above 137, I think you got to be respectful of the uptrend, and it looks like it could extend towards 139. And, you know, obviously if we have this Gartley pattern, we've talked a lot about this yesterday. If we have this Gartley pattern turn into a cipher butterfly, you know, we could really break out to the upside. All you have to do is sprinkle a little bit of risk aversion on the market, and this thing will be trading above 140 pretty quickly. So, especially when you have a central bank that's now not hiking rates anymore. Anybody have any thoughts here with the Canadian before, you know, we wrap things up with the BOC today? Anything you really wanted to get out, team? Anybody? Going
keep
once.
an eye on the cake crosses as well.
Yeah,
Sorry,
I'm a buyer of crosses versus Canada on dips. I think, as we've been saying a couple of times, Bank of Canada is starting to be a bit mellow about everything, and so that puts them in the camp of the less hawkish, I guess. So if they confirm today, but they could do. I mean, the opposite of the RBA, right? The RBA did a dovish hike. They could do a hawkish standstill. But I'm think that Canadian dollar will remain a bit defensive compared to some other currencies. That's my view.
Yeah, and it seems like the market agrees with your view too. I mean, and when you have the Canadian weakness that is really, coming through the market at this point, then I think the other thing you got to factor in is crude. Crude looks like crap, and I'm not going to dismiss the fact and ignore the fact that crude oil really has had a false breakout to the upside. You can see how we did a false breakout here. We had a false triangle breakout, and we're back below the 200. We're back below or almost below the 50-day moving average again. I'm sorry that I almost said 200. It's a 50-day moving average. Crude looks like it might roll over, and I keep thinking to myself, we are probably going to have a recession. As the second half of this year is realistic. And if you think crude oil is going to go up as we enter a severe recession, I think that's where the market's going to get you there. Chances are crude oil is going to start to break down in that type of economic environment if it does come to fruition. Anyway, just some food for thoughts. But don't forget, guys and gals, check out ForexAnalytix. This is our chat rooms where we're at all day long. We have a general chat room. We just opened up our active day trading room. Amanda's in there now. We have our S&P room. We have the Flowonomics room, our macro chat room. So we have chat rooms all over the place, something to fit everybody's needs. So make sure you check us out at ForexAnalytix.com. It's only $1 to try it out, and download the mobile app while you're at it. So that's it for me. Dale?
Very unique to have sub groupings in a community where everyone's pretty much involved in one, and they're able to hang out and share ideas with people that are trading the same markets or paying attention to.
Yeah, everybody's
Really,
got a
it's
different
unique
style. Everybody's got a different style of trading. So, we have a kind of a place for everybody, right?
Yeah.
Yeah.
Yeah, you guys definitely a great job, and I don't think it's done specializing chat rooms. So pioneers. These guys are pioneers, man. Get off your wagon.
I want to thank the team for being here today, and I know you have an interview with another local trader, Chris DeMarco. So,
all right, and thank you, team, and don't forget to be with us tomorrow Friday for the NFP. But thanks, guys. Nice looks, and you guys are the best. Hi, Chris. Welcome back to F.A.C.E, buddy. How are you?
Hey, Dale. How you doing, sir?
My mouth isn't working that great this morning. So,
by the way, Dale, I have to jump in here. I just said Chris DeMarco, and I'm like, because I have a friend with DeMarco Chris, and I know it's Chris Dover, and it just flew out because I saw your handle, and I'm like, oh, Christy Macro. Sorry, man. Yeah. Good to see you, by the way.
You too, man. You too. How's everything?
So they both started with a D, Blake. That wasn't bad.
I know. I just, I hate it when people call me Blake Marrow, and it's like, no, that's bone marrow. I'm the other Morrow. So anyway, just kidding. You guys have a great interview.
Hey, Blake, your work goes to the marrow of every trader.
That's right. To the heart of the bone. Is that it? Sorry. All right.
All right.
Bye, guys.
Buddy. All right. So, Chris, what's top of mind? How have you been?
Been great, catching my little toddler's weekly cold, so my voice will be a little off today, but that's okay. Other than that, everything's amazing.
Yeah, they're biology experiments, aren't they?
Oh, they do it. They do it. They put in the work.
Breeding ground. So what markets are you paying attention to, and do you have a reaction to what the market did after Powell played mean cop yesterday?
We went into it short S&Ps by some puts yesterday. Okay. Pretty much bottom on the close. Same thing right now. Bought some on the close last night. We've been riding some pretty good things. Asymmetrical risk, so a minor stop out if it does hurt. But that's pretty much what we've been looking at: crude and S&Ps, and they've just been banging around, pissing everybody off. It's the best way to say it.
Yeah.
You
know, this level right here to me seems pretty important, to use your handle on a macro, because 3,900, I think if we take it out, there's problems. Don't you think there's problems if we get back under this, negate this breakout line?
Yeah,
I don't think
exactly.
we should retest it either. Do you?
Well, I mean, we're close. So what we had last week, there was a lot of people that were totally offsides. They're totally offsides, and I'll use a volume profile sort of tool to help me see that. A huge amount of volume happened.
You want to share your screen, Chris?
Sure.
Yeah, so we know what you're looking at. Everyone already knows what I'm looking at. So let's see.
Yeah. Here we go. Got that.
Okay. All right.
Okay. This is SP futures weekly. And one thing I'm always looking for is a volume profile is, so just like really dial it in here. The highest volume node is the darkened area here. I'm colorblind, so I don't make too many colors on things, just contrast. Okay. And so just open, high, low, close, bar, whatever, opened here, went all the way down here, sucked everybody in on the whole length, and then just on Thursday, Friday, ripped up, closed at the top. So you have a lot of what's called trap traders here on the weekly. Okay, what you want to see is follow through. What this represents here is a bunch of volume up here, right? Oh, great, we're following through. That's lovely, except, Jerry comes in and Jerry says what he says, and here we are. And so you have trap traders down at the bottom, trap traders up in top, and everybody in here just sweating bullets. And as you said, 39.80, 39.90 was the area. That 39.90 for me, 96 down to 65 or so is where there's a lot of people who are just going to be, if they're long, they're gonna be like, we'll reload. If they're short, they're going to feel comfortable and be like, okay, I'm out with I'm out. And that kind of doesn't give us a whole lot of resolution. And you can see where that happened at the beginning of February. That's the inverse pattern, huge amounts of volume, and we started closing down, and that's where we dumped. So right now, if I look at the weekly, that's kind of the bigger picture. But for me, we're in a generally bullish environment. This is a daily. And
it looks like we should hold around these levels if we're going to make another move above 4,100, right?
It's getting back into that area, and you can see I have it marked off over here, this 39.60 area, which is below like yesterday's low. We got to stay in this area for bulls to have any strength, and of course, we can always do. See a nice Fibonacci area in here, and we're just heading down to it. And, we tagged that 61.8 into yesterday's close and in overnight. And the last thing I want to look at here is I look at an aggregate of the last 100 days close to close. So the 1% close plus a 1% close in the direction that gives me the volatility and the direction of the market in this simple number line. And it's bullish. It's not it's not bad in any way. It's what it should be doing. And let me throw this.
So what is the readings that you have on the bottom? Go back to the previous chart.
Sure. So this is called the SQN indicator. It's it averages the change, daily close change of the last 100 days. So if
green
yesterday
is
was
bullish and yellow is cautionary and red is sell.
Yeah, it's they're directional. Yeah.
Okay.
So blue, if you get blue, that's called bull volatile, and that's where you get a major market top. And if you get a crimson dark red, major market bottoms. And statistically, we've only got those bottoms, the blues, which you can't see, maybe into So you can see a blue here.
wow.
There's a major market
Yeah.
top. Let me just
Yeah.
auto this so it lines up. And, we've only gotten a major market bottom. That would have been December 2018. So they're so rare. And the blues are a little bit more common. But what you really see is about 70% of the time is in this light green and green area. And what that is just slow moving indecision. And if we were to, like, if I pull my statistics out, I can say that 10% of the time we're actually going to have a place where a major market top would happen. And I consider a major market top would be a 10% sell-off. So a major market top would have been February to now. That just, for,
Okay.
and they don't really happen all that often. And it's a lagging indicator, so you don't see it. But so many traders are so worried about the one-off incident, right? This Christmas 2018 incident where or just December of 2018, where we just melted down, right? But if we were to look at over the course of my trading career, 24 years, I can name about 10 days or 10 periods of time where it was really the worst thing in the world. And the other thousands of days, couple of thousands of days, 3,000-4,000 days, it's just normal trading. So then what we're looking for is just where can we put, if we are wrong, where can we put our stop so that it's a nice, gentle stop? And where can we, if we're wrong, it's going to be wrong in a really big way. But if we're right, if it's everybody's betting on it being wrong, that's going to give us a huge move to the opposite direction. And right now, everybody's bared up from Powell yesterday.
Right.
And then, slamming down into that. So this environment for me, I'm looking for back and forth a little bit more than I am really directional. And, we have a nice fib retracement from this low here, from that to that, right? 61.8%, we bounced. We have another fib retracement from here to here, right? Up to 50%. Now we're so everybody's offside in this point in time. And that just makes it really easy to flip back and forth on a shorter term environment instead of, the best of you, like probably you, Dale, shorted this one up here. The rest of us, like me, are banging around in the middle trying to figure it out.
Okay, so any other instruments you're focused on? You said crude. Crude really was hanging in there until yesterday. So is yesterday one day wonder? Are we going to finally get a breakdown out of this tight range we've been in and trade 62?
Yeah, I've gotten a lot of
I mean, really,
it's looked
nothing.
like,
look at that range. Yeah,
it's done nothing. It's every time it's gotten above 80, everybody called for 160 or the new 300 or whatever. And then every time it breaks back below 80, it's $30 or negative crude again or something. And again, the reality is it's like you pointed out. Yeah, it's just sideways. So we were up pretty big yesterday, and then or sorry, last week.
Yeah, they wiped out a great week in a day.
Yeah. And it was, we have a lot of imbalanced traders over here that were short. And now, we had imbalanced traders that were long over here. These are weekly. And so we'll do that, and we'll come back into our daily and look at our histogram here. And as it's just quiet. So the reading on this, again, this averages out the last 100% change days. So if you have a 3% day every day, it's not that big of a deal. We had a 4% day yesterday, and as dramatic as a 4% day is, it's not that big of a deal relative to everything else. Like how many if we look at the chart, the histogram here, it's really not that big. It did show that we were topping, of course, but like who's going to short based on that? There's a lot of indecision, and but if we take a look at the dollar, same sort of thing, except the dollar did finally show a deep dark red, which is a major market bottom, and we don't get those that often. They're about 1% of the entire trading history. Currency is a little bit more so, but they don't time it. They just give you the environment, right? That a reversal is in order, and it certainly didn't time it. But it said we're in an environment where we can start turning on the dollar, and eventually it did. That's you look for a reaction when you get this environment. Like, okay, something big should happen, and it was a long, boring January, and then something big. That's a big move, real quick. Calm down, and then yesterday again, big responsive move. So dollar getting strong. That's definitely going to have an effect on S&Ps. That's definitely going to have an effect on our crude positioning. And but I think everybody's kind of just still waiting to see if it is going to break down, because everybody who has been putting the big moves on just keeps getting stuck. It's hard to sit through a 5% day that goes against you. And especially if you're using futures to hit that market, something with such leverage that you're going to get margin called. It's a perfect environment for everybody to just get wore out. And
there are a lot of people saying that it's a difficult market. It's because you have to be tactical, and that takes paying attention. It's not like buying the spider. So those days are gone. So pretty much strong dollar. I've been if you get the dollar right, I think you get everything else right.
We're definitely in that environment for sure, where the dollar is the big wrecking ball, as everybody had been pointing out.
Did you find it interesting that as hawkish as Powell was yesterday, the bonds still acted well? 10-year yield really did not hike up. It was all on the short end. The bonds actually look pretty good. I mean, if you pull up TLT or any kind of proxy, they look like they're trying to come out of here.
Yeah.
Which is the opposite of the talk that, unless that's just a deflationary type of move, people buying bonds, but I wouldn't be short.
Yeah. In fact, an algo
There's
I run
TLT.
an algo I run has been long. We got short into back in March. At the end of February into March, and we caught some of this move here. Pretty much we got out right here, which of course, when your algo takes you out and then that happens, it's always the worst. But you're like, I did pretty good. I got it 103 or so down to 100. Yeah. This is great. And then it breaks 99 and you're just, but yeah. And then definitely capitulation down in that area down here. And you can see that there's a lot of volume. Of course, it's capitulation because it's that big round number at 100 that magically means something for somebody, but really doesn't mean anything. Bonds have not responded in the same way that everybody else is worried about. And
currencies got hit, metals got hit, S&Ps got hit, and the market that Powell is talking about or trying to manipulate with either tighter rates became more inverted, and the long end of the curve acted well with the hawk. So maybe it's not unusual if people believe he's really going to drive us into a recession that would create some money flow out of equities into bonds.
Mm-hmm.
Yeah, maybe the way it used to work. It wasn't that way last year, but maybe that's what's going on here. You have anything in the yen? Something I'm trying to top pick up here.
Top pick in the yen. Let me turn these guys off, and I'll add my.
And it's okay if you're bullish here. Just want.
It's okay if I'm bullish. I'm bullish the dollar.
Okay.
But the yen is, as we know, just a huge variable in the currency markets around the world. Always. I'm
What's your stuff
surprised.
saying down there with it being red? What
So
would
this
I
is
be
this called
looking
a so this is a bear quiet market regime that I call it. So the directional is down and the volatility is low because the daily changes are really small, except when they do have these bigger 1% days.
Yeah.
I was listening to what you guys are talking about with Kuroda going out, and how are they going to manipulate intervene is the better word. How are they going to intervene in Japan with is Kuroda out? When does it happen differently? Because they've been doing it for I don't know 40 years or so, right? Reacting a different way. 50 is it 40 something years where they've kind of just been that thing, and the world relies on yen being the carry, right? Buy those JGBs and go out and play. And especially if you're getting a hawkish bond on it, or a high rate on the US bonds. And so just how much money is tied into that is always the question. But whatever, I'm trying to act too macro here. Let's
well, that's your handle. Change your handle to micro, Chris D Micro. And trade I accidentally pulled up a 15-second candle chart. So
they work
15 minutes. So what's your business model, Chris? What do you do? Do you have a website? Refresh our viewers' memory of what you do and why you're out there on Twitter.
Yeah, pollinatetrading.com's the website. I actually have a free prop trading course where on YouTube I'm just kind of helping. There's so many prop firms out there, and the money is just like flowing everywhere. And the people who are making the most amount of money are the prop firms on the resets mostly, and tryouts and fees. They're happy to make money on traders, but who actually make money. Let me see, where's prop? pollinatetrading.com/prop is where I started to put together my.
Is this a new thing you're doing because of the popularity of prop trading?
It is, yeah. There's so many people who are very interested, and they're just wasting money. They go out and they put up couple $100. They get access to whatever $500,000 or hundreds of $1,000s in notional buying power, but really just a couple $1,000s in stop. And they're not really understanding the business is not to show a prop firm that you can go in and in 30 seconds make their $10,000 profit target on massive leverage. Their business is for you to come in and do that, and then not every prop firm, but come in, over risk, overexpose, blow up the account, and then sign up for a new one. So what I do is put together a course, prop trading course on YouTube. You probably just search for my name. It's free. There it is. And I just explain how to just, let's say, okay, here's how you manage risk. Here's how you use a trading system. Here's just a blueprint to trade prop. And that's really the focus this year. Personally, I'm not really doing prop trading myself as much anymore. I've been prop trading I started in 1999 as a prop trader, but it's mostly just my own trading now. We have a group, Trading Lab, at pollinatetrading.com. You can join us. We have a Slack channel, live stream during the trading days. And I mean, this course, if nothing else, this should hopefully.
How many assessments did you fail?
Oh, geez. I don't know. Before.
Four? Okay.
Many. Yeah. Well, let's say before the modern prop era, we'll call it, none, because it wasn't built like that, right? You were brought in and you were mentored and you were kind of like, it was a trading operation.
Right.
Now, your credit card's in there and you supposed to be flat at 3 p.m. or whatever. And you're like, oh, I forgot one micro contract, and you go in to shut it down and your account's blown. They got so many gotcha rules in there that it's kind of ridiculous. So, oh, whoops, it's making noise.
Okay. All right. So any last message you want to bring us here to wrap it up?
I would say right now it's the market is undecided, and it's always undecided, right? I would say look to let the low risk, high probability moves show up and use risk management to take those. Don't throw Mr. or Mrs. Cojones at the market and try to prove it right. This is a
tread lightly, right?
Hey, better to make $100 on a day than and not lose 1,000 than try to make 1,000 and lose 1,000 is the way I always look at it. Tread lightly.
Well, I'm rooting for you. I'm rooting for you, Chris. And if you could help people get the max out of to be prepped, to learn how to trade, to do either on their own or try prop, more power to you. I'm for your mission. Good luck.
I appreciate you, sir.
And everyone that you talk to and teach, that you're giving people, something you believe in and can help them avoid some of the mistakes we've all made.
I hope that's the case. That's my plan. That's my mission.
And then after that, we could do, Chris? I know that you were a military guy, so I'm going to invite you. Would you like to ride in a beautiful balloon way up in the sky in my beautiful balloon? Huh? Do you want to?
What is that reference? That reference, I don't know it.
You know what I'm talking about. And you cannot get shot down in my balloon. So don't worry about it, buddy. Just having a little fun with you, and really good luck into the NFP and every day, and appreciate you coming here and sharing your views. My takeaway is use your market profiles and know your areas. So thanks for showing us what you see today, Chris.
Thank you, Dale. I really enjoy our conversation, as always.
Okay, so that's a wrap. You could follow Chris at Chris D Macro on Twitter. You have a website address you want to give out before we say goodbye?
pollinatretrading.com. You should be able to get the information there, or on Twitter, Chris D Macro. I'm on Twitter all day.
Okay, so pollinate. Think about what the bees used to do before they all died.
That's exactly right.
All right. So thanks, Chris. Good luck, buddy.
All right, guys. Have a good trading day, sir. Have a good trading day, everybody.
And you could join the team in 18 minutes on the morning edge. Adios. Don't just count your bees, count your blessings. See you guys. See you, Sonata.